Welcome to Lecture 2 on Chapter 1. We're continuing our discussion of external auditing, and in this lecture we're focusing on audit quality and the client acceptance process. When we talk about audit quality, even though the concept of quality may be somewhat nebulous, there are specific attributes that we need to consider, and we're considering these from the perspective of the auditor. The audit quality implies that the auditor has performed the audit in accordance with generally accepted auditing standards. Now we'll talk about these auditing standards in a few minutes. A quality audit is one that provides appropriate assurances that the audited financial statements and disclosures are presented in accordance with generally accepted accounting principles. A quality audit is one that provides assurances that those financial statements are not materially misstated, and again we're using this term materiality or materially misstated, whether due to error or fraud. When we talk about quality, we need to understand that the auditor drives quality to a great extent. There are additional factors related to this, but the key point is that the values and beliefs of the firm, a quality firm drives quality. Now you notice on this top line here, between audit firm culture and skills and qualities of the partner and engagement team, these are on the same level. One of the fascinating things about working in auditing, and especially working in a firm that has a high value and belief system, is that they hire skilled auditors, partners and junior auditors and seniors, but not only that, but they provide very specific training to increase the quality of the skill set of the audit team. This frankly is exactly the kind of team that you as an auditor should be interested in working with. If the values and the beliefs of the firm don't match what you consider to be important in your career, chances are this is not a firm that you'd want to spend time on. But the point we want to make is that the culture and the skills, the continuing increasing of the skill set of the audit partner and the team, will increase the effectiveness of the audit process. So we want to focus on, you notice on the top here, we talk about audit quality, and down here we're talking about audit process. So process drives quality. The way we do the process, the effectiveness of the process drives quality. Now you notice on the bottom here, there are factors outside the control of the auditor. As an example, the client firm has a very large role related to the audit. And there's firms that we work with very well. There's firms that possibly we're not going to work with very well. In any event, these are factors that in some way are actually outside the auditor's control. However, I would suggest that by the auditor engaging the firm and explaining how audit quality is so important, that the auditor can essentially affect the quality of the work coming from individuals and groups outside the audit firm, such as the client itself. You notice also that the reliability and usefulness of audit reporting, including the auditor's communication regarding key issues, also impacts the quality. Now, we've talked about the audit report or the audit opinion letter as being the final product of the audit, which is true. Essentially what we're doing here is we are issuing an opinion of the fair presentation of the financial statements. However, during the course of the audit, the auditor, the audit partner, and the audit team are communicating on an ongoing basis, not only with management, but also with the audit committee. We're doing this informally. We're also doing this from the perspective of issuing very specific letters. We're going to be talking about this type of communication over time, but the reality is that even though this is beyond essentially the scope of the audit opinion letter, all of these interactions, all these communications actually do impact the audit quality. And the auditor really needs to take an appreciation of understanding that these, in fact, these are very important in the audit. So the ultimate goal of audit quality is to minimize lawsuits. We want to reduce the risk to the firm. You notice the first line here is the professional requirements that help achieve this include primarily maintaining auditor independence. Now, over the next couple of weeks, we're going to talk about very specific requirements related to independence. But the key thing that we want to take away from this is the fact that the independence is based upon fact and perception. So you notice here that there are issues of fact in terms of self-interest, financial self-interest. So we absolutely need to be independent of the client in terms of having a financial interest in the client. That's pretty easy. But you also notice that the appearance of a threat to independence may in fact affect audit quality. Look at this item here, familiarity threat. Well, it's very possible that we may in fact become too friendly with the client. Not that we are rude or anything like this, but the idea is that if we become too familiar with the client, this may in fact affect our independence, or at least, at minimum, give the appearance of a threat. You notice also that we have at the bottom here a management participation threat. One of the things that we need to understand is that we are not part of management. We are actually auditing management, or the financial statements that are the responsibility of management. So if we participate in the management process, we essentially have defeated this whole concept of independence, and we would in fact be auditing ourselves. So we're going to talk about over the next couple of weeks very specific threats that relate to management participation and how this affects independence. Other professional requirements that help achieve audit quality: participation in review programs, external reviews, the PCAOB, or peer reviews by the AICPA, increase the level of audit quality by having someone else review our activity. Engagement quality reviews, usually done within the firm. Essentially, someone that is not a part of the audit will come in and review the documentation and see if he or she can in fact come with the same conclusion that the audit team came in. We'll talk a few minutes about the audit engagement letter. And the audit engagement letter, the important thing about this is it clearly defines what our role is as the auditor, and it clearly defines what the role is of management. But it also, and one of the things that we need to understand is that while we may have a strong understanding of the audit process, we need to understand our limitations. So our limitations may be that we focus on a specific industry, or our limitation is that we understand that we can't do everything, so at some level we actually bring in experts to help the process. Documentation, absolutely critical to the audit process. The PCAOB perspective on this is that if it's not documented, it's not done. Let's talk a few minutes about accepting a client and talk about sort of what needs to be done, what's required to be done, and why this is so important. Accepting a new client is a good thing. It encourages new business. It helps us grow. However, we're not going to accept any client. You notice some of the requirements that we have in terms of accepting a client is we request that management authorize the predecessor auditor to discuss the audit process with us. So essentially what we're saying is before we accept a new client, we ask that client for permission and we need permission, but we ask that client for permission to talk to the auditor that they're currently using or they've used in the past. If management refuses, then this possibly may in fact shed light on our decision whether to accept or not accept this client. There may be legitimate reasons why the client doesn't want us to talk to the predecessor auditor, but in fact, not being able to talk to the predecessor auditor would cast a poor viewpoint of this client in terms of their reliability and ethical values and so forth. The communication with the predecessor auditor may be either written or oral, although obtaining the communication in writing is better. The auditing standards do not include this requirement for international audits, and somehow the rest of that line actually got cut off. Okay, so matters to discuss with the predecessor auditor. So let's talk about this. So we have talked to the potential client, and we said we'd like to talk to the predecessor auditor. And they said, well, why do you want to do this? And we explained the process. So now we are talking with the predecessor auditor. Well, what are we interested in finding out? We're interested in finding out information that might bear on the integrity of management. We also might talk about disagreements with management about any accounting policies, auditing procedures, or other similar or significant matters. Communication with those in charge of governance regarding fraud and non-compliance. Communication to management and those in charge with governance regarding significant deficiencies and material weaknesses of internal controls, and the predecessor's auditor's understanding about the reason for changing auditors. Changing auditors is not a bad thing. And in fact, it's not a bad thing that a client may look for an auditor that's less expensive or has a similar fit in terms of culture and understanding of the industry as the specific client. So there's good reasons to change auditors. And in fact, it may be that the auditor is not very good. It's hard to imagine that, but sometimes auditors, there's varying degrees of quality of auditing. There's no question about that. But what we're trying to find out from the predecessor auditor is management of a high level of integrity? Were there disagreements that would suggest that management is trying to possibly manipulate the financial statements or go beyond certain laws and regulations? Now you notice it says that communication with those in charge of governance. Essentially what we're talking about here, and we kind of alluded to it a few slides ago, is part of the audit process is that during the course of the audit we are communicating on a fairly regular basis with the audit committee or with whoever the governance committee is that we're actually reporting to. So these communications with those in charge of governance, essentially we're asking, what have you communicated to the audit committee during the course of the audit? Have you communicated that there have been issues related to compliance with laws and regulations? Have you communicated to the audit committee that you've had significant disagreements with the CEO or the CFO? Maybe you've communicated that there's been significant deficiencies and material weaknesses of internal controls. Maybe you've communicated that, or maybe you've communicated that things are going well. Whatever the case may be, we're trying to find out what that communication actually was. And the predecessor auditor should actually have all this documented. There's a nice slide here, and this actually is in your book. And I won't go into too much detail, but this really emphasizes the fact that at the beginning of the client engagement, and we're talking about the client engagement, just kind of visualize that we're going into the audit on an annual basis. So it's a continuation client or a new client. There's certain things that may, in fact, we need to consider. Whether or not we're changing or not, we still need to consider risks. We need to consider the integrity of management and other characteristics related to the financial health of the organization. It's possible that when the new engagement period comes in, that the client says, we're not going to do the audit this year. Maybe it's been bankrupt, or maybe they changed auditors. Whatever the case may be, this is a time to assess what's taking place. At the annual basis, we're going to talk about audit fees. Keep in mind that we're not doing the audit for free. The audit process is a for-profit enterprise, so we need to be very upfront in terms of what the fees are for the audit. We need to also be upfront in terms of what additional fees we are going to charge related to the audit, maybe travel, maybe additional services, whatever the case may be. This needs to all be communicated, and we're going to communicate this in the client acceptance letter. Okay? So if everything works out fine, we are continuing the client. If it doesn't, then we're discontinuing the client. If this is a new client, then we're going through this process, and if we've accepted the client, then we can then begin the phase of the specific audit. Okay, I want to take us to the website related to the auditing standards, and this is the PCAOB. I want to focus a little bit on the PCAOB from a couple of different perspectives, one of which is how things are actually laid out. So you notice that we're talking about auditing. There's ethics and independence issues, quality control, attestation. When we talk about attestation, we're talking about things other than a specific audit. And some of these things are actually talked in brief in Chapter 1, but we're going to go into those in later chapters. Okay? So the issues here are communications with the audit committee. Now, what we have here is we have Auditing Standard 16, and again, we are talking about auditing. This is communication with the audit committee, and we're looking at matters to include in the engagement letter. Okay, so you notice here is that the auditor includes the following matters in the engagement letter: a description of these services, or the objective of the audit. The objective of the audit, first thing is it an integrated audit? When we're talking about the integrated audit, is not only are we auditing and expressing an opinion on the financial statements, is we are integrating that and also expressing an opinion on the internal controls over financial reporting. In the audit of the financial statements, this is simply the expression of the opinion of the financial statements. So what we described is we described the objectives. We also described the auditor's responsibility. So you notice that there's some very specific responsibilities related to the audit. It explains exactly what an audit is. It's surprising, but many clients are not fully aware of why the audit is actually taking place. So it describes the integrated audit as well as the audit of the financial statements. Now, key to the engagement letter is a description of management's responsibilities. So we've already identified that management is responsible for the financial statements. Management is also responsible for the internal controls over financial reporting. There are specific issues related to the audit in terms of providing specific information to the auditor and actually providing all information that the auditor is requesting during the course of the audit. So these are the basic features. There's also going to be a function related to talking about audit fees, audit timing, and very specific issues related to access and so forth. But these are the issues that we want to consider when we're looking at the actual engagement letter. Now, I had talked about the generally accepted auditing standards. This is critical to the quality of the audit. So again, we're still at the PCAOB website. We're going to the auditing section, and what we're looking at is AU Section 150, which is the generally accepted auditing standards. So you notice there are specific standards. And actually, this is an area that you need to have a strong understanding of. We have what's called the general standards, we have the standards of fieldwork, and then finally the standards of reporting. The general standards is that the audit is to be performed by a person or persons having adequate technical training. On the second point, in all matters related to the assignment, and independence in mental attitude. So we need to have independence. We talked a little bit about independence in this presentation. We're going to talk a lot about independence in future presentations. And then we have this whole concept of due professional care is to be exercised in the course of the audit and the preparation of the audit report. So we need to have a questioning mind as we are examining transactions and documentation. This is all part of the due professional care. We're doing more than simply checking off boxes or accumulating data. We are examining this data. Standard of field work is that it needs to be planned, and you notice that if there are assistants, if any, they are to be properly supervised. So this basically means that we need to have a process where we take assistants, we train them, we continue to build them in terms of their skill set as they are working through the audit process. The second standard of field work is actually very important, and we're going to talk about this a lot over the next, actually throughout the course, because this really drives what it is that we're trying to do in relationship to the audit. Is you notice that we gain a sufficient understanding of internal controls to plan the audit and to determine the nature, timing, and extent of audit tests to be performed. So what we're talking about here is there is a planning phase. Part of the planning phase is to assess the internal controls. This planning phase, once we've assessed the internal control and the control risk, is we determine the risk of material misstatement. Based upon this, we determine how much testing needs to be done based upon this criteria: the nature of testing, the timing of testing, and the extent of testing. So there's a process of planning, there's a process of examining the internal controls, and then finally, when we are attempting to measure monetary misstatement, we determine how we test this based upon our results of the audit process to begin with. On the third item is we have sufficient and appropriate evidence to be obtained through inspection, observation, inquiries, and confirmations to afford a reasonable basis for our opinion regarding the financial statements of the audit. Standards of reporting, just very briefly, is that we are auditing based upon generally accepted accounting principles. The report shall identify circumstances where these principles have not consistently been observed. We are looking at disclosures, and then finally we are expressing an opinion. The point that we want to make related to the opinion is that we are expressing an opinion of the financial statements taken as a whole. So we do not audit simply the balance sheet or the income statement. We're looking at the audited financial statements taken as a whole. Okay, so I thank you very much for your time. I think this is a very good introduction in terms of where we're going to go. We're going to have a lot of detailed information regarding the audit process, but these two lectures that we have specifically related to Chapter 1 really forms the basis of everything that we're going to do going forward. So I thank you very much for your time, and I'm looking forward to talking to you shortly.